Have you ever felt like the economy is telling two completely different stories at the exact same time? It's weird, right? On one hand, you hear about explosive growth and incredible innovation. And on the other, it feels like there's this intense pressure and struggle. Well, a single day of news recently gave us the perfect snapshot of this exact thing. So let's dive in and see what's really going on.
Okay, just look at this. On the very same day, Snap, the company behind Snapchat, their stock just rocketed up by 25%. At the same time, Elf Beauty, a super popular cosmetics company, watched its stock absolutely plunge by nearly 30%. One day, two companies, two completely opposite fortunes. So, what on earth is behind these wildly different stories? What powerful forces are pulling our economy into totally different directions at once?
All right, the first force is something you're hearing about everywhere right now. It is the new gold rush, and it's all being fueled by artificial intelligence. And listen, this isn't just hype. For some companies, it's turning into massive, tangible wins. So this right here, this is the heart of Snap's 25% surge. The company announced a massive $400 million deal with an AI startup called Perplexity. They're going to integrate its conversational search right into Snapchat. That move, plus a really strong forecast, has investors totally convinced that AI is the key to Snap's future. And Snap is not alone in this AI gold rush, not by a long shot. Take Figma, the design software company. Their CEO, Dylan Field, he put it pretty plainly. Their AI tool, which can literally generate app designs from just a few words, was a huge magnet for new business. This isn't some vague promise about the future. It's a direct line from an AI product to real paying customers. And the results? Well, they really do speak for themselves. Figma's revenue jumped 38% year over year. Almost a third of their biggest clients are using their AI tool every single week. And get this, their net dollar retention for those big clients is 131%. That means for every dollar a big client spent last year, they're now spending $1.31. That's just incredible momentum, and it's all powered by AI. But of course, that's only half the story. On the other side of the economy, a very, very different force is at play. It's this persistent, widespread squeeze that's creating some intense headwinds for a whole bunch of other companies. So let's go back to ELF Beauty, the company whose stock tanked 29%. What happened there? Well, the company sources most of its makeup from China, and it saw its profitability just get crushed because of new tariffs. This caused their net income to fall by a staggering 84%. Yeah, it's no wonder investors were running for the exits. And this is not an isolated problem. Major retailers are feeling this pressure, and they're passing the costs right along to us. Look at these price hikes just this year. While Walmart and Target raised prices by over 5%, Amazon's prices jumped by almost 13%. So why the big difference? Well, it's because that huge marketplace of third-party sellers on Amazon, they often have to pass those higher tariff costs directly on to you, the shopper. This really raises a big question. What's the root cause of these price hikes and these squeezed profits? Well, the answer takes us from the retail aisle all the way to the US Supreme Court. The key thing to understand is that these tariffs are at the center of a huge, high-stakes legal battle. And during the arguments over their legality, Supreme Court Justice Sonia Sotomayor really got right to the heart of it with this quote. She basically said, these tariffs function as taxes, which are paid by American businesses and ultimately by all of us, the consumers. But the squeeze isn't just about tariffs. Oh no, we're seeing pressure from all sides. You've got labor disputes escalating, with the Starbucks union authorizing a major strike right as we head into the crazy holiday season. You've got intense competition hitting the EV market, with Lucid Motors missing its numbers and cutting production. And the global market challenges are serious. Look at Tesla. Their sales in Germany have cratered by more than 50% this year. Okay, so that's the big picture for major corporations. But how do these massive forces, the AI boom on one side and this economic squeeze on the other, how do they actually show up in our own lives? It turns out they're shaping some of our most personal financial decisions. Just take a look at the housing market. For the first time in over a decade, three-bedroom homes now make up the largest share of new builds. At the same time, the share of those bigger four-bedroom plus homes is going down. This is such a clear sign that in a squeezed economy, people are having to prioritize affordability over extra space. And it's not just about the homes we live in. People are also rethinking how they protect other major life investments. I mean, think about it. In today's uncertain economic climate, Spending $33,000 on a wedding feels like an even bigger risk than usual. And that's why more and more couples are turning to wedding insurance. For a pretty small cost, usually less than $200, they can protect that huge financial investment from the unexpected. It's a perfect example of people just trying to find some security in a really unpredictable world. So, there you have it. We've got these two powerful narratives happening all at once. The AI boom creating incredible wealth on one side, and this widespread economic squeeze putting immense pressure on just about everyone else. These are the forces battling to define our economic future. And that leaves us with a really critical question. As one part of the economy rockets forward on the promise of AI, and another part gets squeezed by rising costs and fierce competition, what happens next? Is the incredible growth from this AI gold rush going to be enough to lift the entire economy with it? Or will it just widen the gap between the winners and everyone else? That's the big question this one day of news forces all of us to ask.